This is episode 248 of Zen and the Art of Real Estate Investing with my guest, David Auerbach. David is the Chief Investment Officer at Hoya Capital. He's been in the REIT industry for almost 25 years, and he publishes the Daily REITBeat Newsletter, a widely followed industry publication that covers, you guessed it, publicly traded REIT sector. He's also a consultant with Auerbach Consultants. David, welcome to the show.
Jonathan, thanks for having me. It's great to be here.
Yeah, well, I want to get in on this REIT beat because it's not something that I am fully versed in, and I hope my listeners are along with me. So just tell us about how you got into REITs and why, and then we'll kind of get into what they are and the background and how they're interesting in today's market, as we were just talking about.
How much time you got?
Yeah, a lot.
So my road to get to the REIT industry is kind of winding. My Wall Street journey started when I was 6 years old, actually. When I was growing up, my father would put the Wall Street Journal in front of me with all the stock tables.
Yeah.
And I remember being fascinated by like seeing Boston Celtics, or when he'd show me, look at this one stock price and looking out, it's so much bigger than everything else. And it wound up being Berkshire Hathaway.
Yeah.
And being educated at a very young age about the stock market. And I remember growing up when I would go into elementary school, kids would usually be watching cartoons before school starts. And I was watching CNN Money, or that version of it way back in the day, because I was just so fascinated by the markets. Fast forward, going to college, I knew I was going to be on Wall Street in some capacity. I started out as a retail advisor, managing mom and pops, grandma, grandpa, whatever you want to call it. And I remember it was my first couple of months. I'd have my licenses. I know I'm better than anybody. I know everything.
Yeah.
Let's go. And I remember a prospect reaching out to me and they wanted to have lunch. And I told my boss, hey, I've got a lunch date today with the prospect. And he goes, no, you don't. I'm like, what are you talking about? He's like, you want to network? You want to build a book of business? That's on your time, not on my time. And I was shocked.
Yeah, I'm shocked.
Wait, I don't understand. My book is your book.
Right.
Any commissions we get goes to the firm. Like, this is your business. He goes, you're right. And if you want to build a book of business, that's on your time, not on my time. And I said, that is the stupidest thing I've ever heard.
Yeah.
Networking is a 24-hour-a-day job. And I'm not about to call this prospect and tell him that. He goes, well, look, there's the door, my way or the highway. And I said, again, that's the stupidest thing I ever heard. P.S. The next day, literally the next day, I got fired. And back in the day, if you recall, when the newspaper used to publish daily classified sections of jobs and all that stuff, there was a job posting in the Dallas newspaper that, I'm not exaggerating, it was 2 lines, 1-inch font, and it was like, have Series 763, call this number. Called the number, asked for an interview. They invited me in, nailed the interview, and it wound up to be a trader on an institutional REIT trading desk here in Dallas for a firm called, at the time, Green Street Advisors, what's now known as Green Street.
Yeah.
And I remember the first day I started, it was the day the market crashed in March of 2000. And my boss tells me, literally, word for word, kids your age don't get the opportunity that you're about to be given. In the same breath, 5 minutes later, one of the guys on the desk comes up to me and says, don't get comfortable. This business is going away. REITs are going to be gone in 5 years. Who cares about REITs? Well, fast forward to 25 years later, and here we are still talking about REITs. So he was wrong on that. But I was very lucky because when I started in the REIT industry as a junior trader on the desk, it wasn't like what we know the REIT industry today. Probably half the number of companies, probably more than, 1/3 of the number of investors that are existing today. It was a whole different world. And so to watch these companies come public, go through various crises like 9/11, housing crisis of 08, 09, 13, 14, you name the story. It was interesting to watch how these companies evolved over time. Deleveraging balance sheets, growing dividends, focusing on the story, the narrative, the communication to the end investor and how they would educate. Look, we don't care about where interest rates are at or the 10-year treasury. We're focused on fundamentals, on operations. And those types of things have resonated with me. But I've been very lucky, like I said, to grow up and watch this industry evolve. And we have, 30 plus guys that are in the S&P 500 now. REITs are everywhere. We're using a REIT right now to film this interview today. So investors are earning dividend income by you and I recording this nice podcast. That's just one example. And it's this daily usage of properties that have made me so passionate about education. Yes, I manage 2 funds. Yes, I'm out there, trying to raise money and everything. But if you don't understand what it is this industry does, why we use it every single day, and it should be a core component of any investment portfolio. Frankly, I don't care if you're an advisor, an investor, a developer, whatever. I tell folks, I don't care if you buy my funds. I could care less if you buy my ETFs and stuff. I wish you would, but if you don't, that's okay. I want you to understand all the great stories that are out there. Do your own due diligence and learn about this industry and the long-term income generating potential opportunity you have investing in some of these names that could be the difference between, frankly, 6 figures and 7 figures in your retirement, depending on when you start investing in this sector.
Yeah, so I mean, it's funny though when you're just looking over this little line and you didn't know it was going to be REIT, so you didn't know it was going to have anything to do with real estate. And you were, I'm assuming from conversations we've had in the past, like you were just like, look, this is stocks is my thing, the market's my thing. But then it turned out to be this kind of hybrid, which is what REITs are as we get into discussing them. Are REITs generally organized among asset classes? Because a lot of what you said were, you have these specific asset classes in a REIT. Are there others that are organized in a different way to be, I guess, more diversified asset wise instead of just diversified geographically within an asset class?
So that's a great question. And the blunt answer is there's less diversified REITs than there were many years ago. And the reason being, the cleaner the story, the easier it is to sell to your end investor. And if you own, let's just say, office and resi, that's 2 completely different stories.
Yeah, it makes sense that
sell layered stories.
Yeah, and again, I mean, I see that in the syndication world, the people who are focused are like, look, we're multifamily. If they just were all of a sudden to toss in retail, no one would think they really knew. But you can get the diversification within an asset class by being geographically diversified. But as you said, we're recording on April 3rd, 2025. This is going to come out in June, and there's a lot going on with tariffs. So the thing that I think with just news, and I have for years, I don't look at the news at all, haven't in 10 years, take little drips here and there from small sources, is that people can overreact to things that happening, because you could react to something that happened yesterday on April 2nd, and then 2 days things could be changed. We're seeing like a very interesting cycle of things changing within a day. Tariffs go up. Oh, wait, now we're going to negotiate. And then it changed. And that could change the entire landscape of one REIT, of people selling and moving too quickly.
One thing that we haven't talked about really is the Fed. And Fed interest rate policy kind of dictates where bond policy goes, right? So if the Fed does cut 50, 100 basis points of where the interest rates are at, that's going to trickle down to the bonds as well. But the REIT yield isn't going to decline, right? So if anything, the cost of borrow improves, meaning I'm a REIT, I need to go out and borrow money. It cost me 5.5 yesterday. It's 4.75 today because we've seen this cut. So I have a call with the company later today. And why I mention this is I'm looking at their investor presentation, and they have a slide here on their investor presentation that talks about their upcoming debt maturities. And one of the things that a lot of people were hammering about real estate coming out of COVID was this commercial real estate wall of debt that's coming due. Oh my gosh, this industry is going to collapse because there's so much debt that's coming due. And what these companies all do, again, talking about that transparency angle, they put out a debt schedule. This is what's due this year, next year, the following year, 10 years out, 25 years out. They're telling you all of their debt and when it's coming due.
Yeah.
And if you ask the companies at the individual level, they will tell you, what debt wall of maturity? I've got 3 years to work this out, 4 years.
Yeah.
This piece that's coming due is only a tiny percentage of our whole, or if they were not to earnings. We have no debt coming due until 2027. I'm looking also at earnings. Until about a year ago, when a company announced earnings, because again, if you go back before COVID, REITs were firing on all cylinders. It was the place to be. You couldn't do no wrong. Things were great.